My name is Sean Golding with Golding and Golding, and we're here today to discuss what are the Streamlined Domestic Offshore Procedures. Streamlined Domestic Offshore Procedures is a form of IRS tax amnesty for individuals individuals, estates, and trusts who are out of compliance for prior year unreported offshore or foreign income, assets, accounts, or investments will want to get back into compliance. A person can't just start to file forward or just go back and amend returns or include informational returns that weren't previously included, because that's considered what's called a quiet disclosure. The traditional voluntary disclosure program and the prior OVDP, they were pretty intense, especially for applicants who were non-willful. So the IRS created the standalone streamlined program or streamlined procedures to assist taxpayers who are non-willful. Streamlined Domestic is one of the more common streamlined program, and we'll go over the basics. We specialize in this area, and we could probably talk about this for days and probably bore you to death. So why don't we just focus on 5 minutes of the basics to give you an idea of what you need to know. Excuse me. So the Streamlined Domestic Offshore Procedures is for U.S. residents, or as the IRS likes to coin it, not qualifying as a foreign resident. When you see the two key programs, Streamlined Domestic and Streamlined Foreign, they both refer to foreign assets or offshore assets, but the domestic and the foreign in the title refers to the residence of the taxpayer. Now, different programs are going to have different specific requirements and different nuances, of course, but the main eligibility requirement that permeates through all the streamlined programs is non-willful. How does the IRS define non-willful? Well, of course they don't. That would make your life too easy. Instead, you just have to show that you're not willful. There's the Internal Revenue Manual. There's various cases to kind of work through, but at the end of the day, it's what's called the totality of the circumstances test. You look at the totality of the circumstances surrounding the non-compliance and then use that information to determine whether a person may qualify as non-willful. To make it even more difficult, willful in the civil phraseology is not what you would think it would mean. When someone says the word willful, you assume they mean intent. And when it comes to the criminal aspect of it, that's true. When it comes to the civil, that's not true. For example, there could be lesser thresholds of willfulness still subject to the major penalties, but a person could be willfully blind, which means they have no actual knowledge, or they can act with reckless disregard, which means they have no actual intent and still be considered willful. So in order to qualify for Streamlined Domestic, a person has to be non-willful. In addition, they had to file timely tax returns. So the IRS, there's a little bit of wiggle room on this area. If you filed your tax returns 3 years late, probably not going to qualify. If it was a few weeks late, you may be able to. They won't put it in writing unless you request a private letter ruling, but we have spoken with them informally for various clients, and there appears to be some wiggle room on that issue. Important to note, late doesn't mean with an extension. So if you file your taxes timely, it's due April 15th, you filed your return March 1st, you're fine. If you timely filed for an extension request to say, let's say October 15th, because you're a U.S. resident, and you filed it October 1st, well, you're still considered timely. One other key issue is that you have to not be under audit or examination. If you are, technically you're supposed to just give that information to the IRS agent or examiner. Practice tip, if you know you have unreported accounts, they may not have brought it up at the initial part of the audit. You may find yourself subject to what's called an eggshell audit, a reverse eggshell audit, and it's important that you talk to counsel. So assuming you qualify for the program, you'll end up paying what's called a 5% Title 26 miscellaneous offshore penalty. That 5% penalty is in lieu of all the horrible, dreadful things you've read about online about 50% penalties and things of that nature. The 5% is instead of those penalties, but you can't appeal or get a refund of that 5%. So once you pay that 5%, that's pretty much it. Now, even after you submit, the IRS could come back and try to audit you. They could come back and try to get increased penalties, but they'd have to prove you willful, and it's a little easier said than done, especially if you've certified under penalty of perjury that you're non-willful. That's been about 5 minutes. I hope you got a basic understanding of the streamlined procedures. If you're interested, you can go to the website goldinglawyers.com, or we have a sister website devoted exclusively to the streamlined procedures, and the website is IRS Streamlined Procedures.com. Enjoy the rest of your day.